So in the previous video, we learned the 10 best trading lessons that Emperor BTC learned from his 10 years of trading experience. And we're going to continue reading this 180-page trading manual together to become an amazing trader like him. So in this video, we're going to learn about candlesticks. Some people might say candlesticks are not that important because that's actually what I thought, to be honest. But for those of you and me who undervalue candlesticks in trading, Emperor BTC mentioned that without a proper understanding of candlestick, you should not be trading. That's how important candlesticks are. And don't worry about memorizing the names of candlesticks. You just need to know the logic behind the formation to predict the future price. So, this fat part is the body, and the thin line is called wick. And in general, if the candle body is longer, there's more intensive buying and selling pressure. And if the body is shorter, less pressure and represents consolidation. And wicks are really important to understand the story behind the candlesticks. So let's learn more about wicks. So the first type, no wicks. A full body candle with no wicks shows the strongest buying and selling pressure. And I don't even want to bother memorizing that name. So it's just full body. If you see a green full body candle like this, the price will likely to go up. And for a red full body candle, it's likely to go down. The second type is the long wicks. There's a long upper wick and long lower wick. So a long upper wick like this and the short body below it, it indicates that the bulls try to push the price higher, but the sellers to control, and there was just too much supply, so the bulls failed to push the price up. So this candle is like a symbol of bearishness. And on the other hand, this long lower wick is a symbol of bullishness. A long-tailed wick denotes that the bears try to push the price down, but the buying pressure was strong enough so it absorbed the supply and pushed the price back up. So bears pushing the price down, but bulls buy the selling pressure and pushing the price back up. And the third type is spinning top. It has long top and long bottom wick with a narrow body in the middle. And it usually implies indecision in the market, but if a spinning top appears at the top or at the bottom of the trend, it means that trend will likely to get reversed. So as you can see it in the chart, there's an uptrend going up, and during that uptrend, if you see this declining volume and this spinning top candle, you can enter a short position when the price goes below the spinning top candle tail wick. So you can enter right here, enter the short position. And the fourth type of candle is doji. A doji is identified by a narrow body, really narrow, and long wick. Kind of similar to a spinning top, but the bodies are much smaller than a spinning top. Since the price closed and opened at almost at the same price, it means indecision in the market. So doji needs to be only applied after a confirmation from volume, because doji can have different meaning depending on these two factors, where it occurs and the proportions of the wicks. So after the uptrend, if you see a doji candle, you'll see a trend reversal. The last candle type is hammer. This is one of the most important reversal tools, and it signifies the end of a trend. So it has a long wick and somewhat narrow body on top with small or no wick above the body. So in the chart, when you see a hammer candle with volume expansion, it's a good time to enter. So conclusion, 1. Long candle body means more intense buying or selling pressure. 2. Short candle body means consolidation. And 3. Long bottom wick means sellers are trying to push the price down but not succeeding. And long top wick means buyers are trying to push the price up but not succeeding. Number 5, narrow body and same proportion wicks means indecision and could also mean the end of the trend. Number 6, long wick and thick body occurs at the bottom or top of the trend means trend reversal if combined with volume. And there is a trading tip. So go to tradingview.com, click indicators, search candlesticks patterns. Then you can click this one. And now you see some signals like bearish engulfing, bullish engulfing. But don't rely 100% on the indicator because as you can see, the indicator didn't catch this super important and obvious bullish engulfing candles. So invest in your knowledge. Indicators are not perfect. So that is all for the candlesticks. And I'll come back with support and resistance in the next video.